Welcome to all the participants and our resource person and our Vice Chairman, Senior Dr. Raj. Today's live webcast on startup registration tax benefits. With this, I welcome to our Vice Chairman, Senior Dr. Raj Chawla, session. Senior Dr. Raj Chawla, earlier Vice Chairman of the NIRC, and right now he is the Vice Chairman of the Committee on MSME and Startup. And under his vibrant and committed leadership, the committee is prospering in this year. So that with this, I welcome to CA Dr. Raj Chawla to this session. Sir, I am handing over the session to you. Right now.
Thank you, Sambit-ji. Good morning to all. Good morning, Anshul-ji, our guest speaker for today webinar, and all the participants. I welcome all of you in this learning session on Sunday. So because this is a very important topic for us, so I think that we should enjoy this, and I wish happy learning to all of you. Thank you very much.
Welcome to our faculty, CA Anshul Kumar, to this session. CA Anshul Kumar is right now that one is startup mentor, startup advisor. He is the regular faculty in our startup sessions, and he is right now that one is he is actively participating in all the startup ecosystem. With this, we welcome to CA Anshul Kumar to this session. Right now, I am handing over the session to CA Anshul Kumar for further proceeding.
Thank you, Sambit-ji. Thank you for the kind introduction, and thank you, Raj Chawla-ji. Under his leadership, as Sambit-ji said, that Startup Committee is doing wonderful things, organizing learning sessions, wonderful opportunities for all our chartered accountants to gain knowledge in this ever-evolving space, I would say. Startup ecosystem is ever-evolving. Day by day, new startups are gaining momentum, and new terminologies, new things are coming up. You know, we have got so many unicorns now. So as a professional, we must keep pace with it, and it starts from the basics. So today, our topic is of startup registration and tax benefits which are associated with startup program. So let me share my screen with you. I hope my screen is visible to all. So basically, today's session is about startup registration process, basically how a startup is incorporated, how it is registered, or what are the different processes of registration, and what are the different stages of registration under the Startup India program. And once the startup is registered, what are the tax benefits and some other benefits which are associated with it. So this is today's basically program which we will be going through in next 2 hours. This is our content slide where we will be discussing about background of Startup India program. What is startup? So what do we generally understand in a layman's language, and what is actually a startup known as per the laws and the regulations? How the entities and which kind of entities are eligible to get the startup benefits? How the business registrations can be taken, where and how the startup registration can be taken, what is the platform, what is the process, what are the kind of questions and information you need to provide. Then we will also understand what are the benefits associated with startups. So let's get around first start with the background of Startup India program. Startup India program was announced by Government of India in year 2015, which was immediately after the Modi government took oath in 2014. So the government realized that job creation and sustainable economic growth can be derived only when private entrepreneurship is encouraged, and only on the basis of government jobs it may not be able to bring in a lot of opportunities and economic growth in the system. So therefore, Startup India program was launched with 3-point agenda, which was to build a strong ecosystem, to nurture innovation. First and foremost thing which was on the mind of government was to create innovative platforms, you know, to give boost to the young entrepreneurs in order to make them do innovations which are suited for the Indian public Indian environment, because till now what was happening is that the inventions which was made by foreigners for foreign economic environment, for foreign atmospheres, they were being used in India whether or not they were fitted or suited to the Indian public or Indian use or not. And Indian people were probably coaxed or forced to adopt them into their own lives. So it was needed and it was felt that Indian innovations which are useful for Indian public must be encouraged, and there must be a framework to support all those innovations, and some incentives should be given to them. So therefore, this Startup India program had the first and foremost thought about was innovation. Second was drive sustainable economic growth. Obviously, public-private partnership is something which can drive economic growth on a sustainable manner. Therefore, private entrepreneurship was encouraged. And third was to generate large-scale employment. Now, once this program was announced in 2015, a formal policy framework was launched in February 2016, which was called Startup India Action Plan. And it was mentioned that how and where the government would provide assistance, how government will be keeping an eye on providing benefits, in which kind of areas they are focusing as of now for Startup India. So a broad action plan was laid down. I have given a link here. I will share this presentation with all of you. So you can then go on this link and see in what details it was launched in February 2016, almost more than 6 years ago. Under this plan, recognized startup entity can avail not only tax and regulatory incentives, but also various other government benefits. And later on, many state governments also launched their own plans, their own startup law policies, which are available on state government websites. So whichever state you belong to, you can go and check the startup policy of your own state and see what kind of benefits are available to them, right? And these benefits are over and above the benefits which are provided by the central government. So now let's understand what is a startup. Is every new business a startup? Can we say that every new business is a startup? Probably no. Every new business is not a startup. As per the government policies and the framework that are defined by Department for Promotion of Industry and Internal Trade, which is in short called DPIIT, it has defined what is a startup, whom they will consider to be a startup. They have defined certain criteria that a startup entity must fulfill all those criteria, only then it will be recognized as a startup for the benefits available. They have criteria over turnover, business objectives, time period since incorporation and setup. So these are the kind of various objectives or undefined criteria which we will study a little later on. Then startup needs to be applied for. It is not that once you have satisfied all these conditions, you will automatically become a startup. It's not like that. Once you recognize yourself that yes, I am fulfilling all these conditions which are prescribed, then you need to apply it online on startupindia.gov.in, wherein the application goes to DPIIT. Once the DPIIT has also satisfied with the information provided by you that yes, you are satisfying all the criteria, then they will issue you a certificate. Only when the certificate is issued, you will be eligible to qualify or classified as startup. Until and unless that certificate is received by the company, you will not be considered as startup for any of the programs or any of the government facilities which are provided by either central government or state government, right? So startup means an entity incorporated or registered in India. So first and foremost, the entity must be registered or incorporated in India. It cannot be a foreign entity. A foreign company or a foreign business or a foreign enterprise cannot be eligible for getting a startup registration. So what are the criteria? We talked about various criteria. One is the period. So till what period you can classify as a startup? So government says that up to a period of 10 years, यानी कि सिर्फ आप 10 साल तक के लिए, जिस साल आप incorporate हुए, उससे 10 साल तक के लिए आपको स्टार्टअप का दर्जा मिलेगा. Only till the period of 10 years you will be classified as a startup and not beyond that. Why? The reason is that government feels that once you have crossed the 10-year mark, it is a sufficient period for you to become a mature business. If you are not grown into a mature business even after 10 years, then government feels that you don't need our support. You can now manage on yourself. Either you should shut down your business or you should have grown into a mature business. So government feels that startup means something which is in early stage of a business growth period. They need support to stand up on their own. So till the period of 10 years from the date of incorporation, government believes that you need support. Beyond that, you don't need support. Entity form, it is important. Which entity forms are eligible for getting registered as startup? It's only private limited companies, not even public limited companies. Partnership firms, that too a registered partnership firm, which we'll just get to know a little later also, and limited liability partnership. So what we understand is the proprietorship is not a entity form which can be registered as a startup. So if I am starting a business in my own individual name, I am not eligible to get myself registered as a startup with the DPIIT. So I must incorporate either a partnership firm which is registered with the Registrar of Partnerships, or a private limited company, or a limited liability partnership. Only then I will be able to get a certificate of registration under Startup India program. Then comes turnover. What is the turnover criteria? So government is very liberal. Earlier the limit were very low, but now they have provided that till the time you achieve a turnover of 100 crore rupees in a single year, till that time they will consider you to be a startup. However, if you cross the threshold of 100 crore rupees of turnover, then the government feels that you have grown into a mature business. You don't need government support, and therefore you have now stood on your own feet. Your business should go on without any benefits being available from the government. So that is the basic reason why all these criteria have been laid down. So turnover means annual turnover not exceeding 100 crore rupees. Say for example, in fifth year you cross the threshold of 100 crore rupees. So from fifth year onwards, you will not be classified as a startup, although your 10 years from the date of incorporation is yet to expire, right? So therefore, either of these criteria, if it is not satisfied, you will cease to be a startup. Then the other criteria is activities criteria. Okay, you are a private limited company not having turnover of more than 100 crore rupees and just incorporated last year. So what you should be engaged in? What is the business you should be doing which will give you a registration of startup? So the activities which government feels should be eligible is first, innovation development or improvement of any service or product. So it is not limited to any tangible product. Even if you are improving upon certain services, even if you are developing certain service which is new in itself. Say for example, very recently we have seen 10 minutes delivery, 20 minutes delivery. So logistics business were already there. Your home delivery businesses were already there. But these new businesses are developing upon and improving upon the processes so as to satisfy the customer in a better way, so as to provide the delivery in a very quick fashion. And they are improving the processes of packaging, delivering, all the logistical issues they are solving, that the moment you put an order on their mobile app or on their website, the order will be delivered to your place within 10 minutes, which was unimaginable just a few months back, but it is now an improvement in the process. So probably this can also qualify as being eligible for getting a startup registration. So even if you are developing or improving certain process or improving any service, that can also be classified as a startup, an eligible activity which can be eligible for getting a startup registration. Why I am telling you is because many times when we are advising people, advising clients, they ask us, the first question is whether I would be eligible to get a startup registration or not, whether my business is something which will be recognized as a startup or not. At that point of time, we must be aware that what can be eligible and what cannot be eligible. Right? A simple trading of goods without any newness or without any improvement of the process. If you have just opened up shop, a distributor shop, right, in any nook and corner of the city, and you have incorporated a private limited company to start that business, probably that activity may not classify as an eligible activity under the Startup India program. However, if you say that I have opened up a departmental store where in my departmental store whatever is available and whatever is not available will be available on a website, on a mobile app, or you can just look at what are the items available in my departmental store, and only when the item which you require is available, you can come and collect that, right? So this can be said to be an improvement in the process or improvement in the service. So if there is something which is new, something which is innovative, something which is improving upon the existing processes or the improving upon the existing products, that can be classified as an innovation or an eligible activity. And the second limb of the definition or the eligible activity says that it is a scalable business model. Scalable business model means that it may not necessarily require you to do something innovative, you do something which is which is improving upon something in existence. However, if your growth model, if your business model is such that it is creating a lot of employment opportunity or creating wealth for yourself or either as a country or for your workforce, right? If you're creating wealth in your business model, then you can also apply for being an eligible startup, even though you are not doing anything innovative, right? So let me give you an example, a practical example. Say, for example, I gave an example of shop. Now, if you are opening up just one shop with just one particular area to be catered around, then it may not be said to be a startup. But if you have a plan to scale up those shops into a network of shops around the city or around the country or around the state, with interlinkaging of everything, wherein you can say that we will be creating a lot of more jobs by creating this chain of departmental stores, and we will be creating wealth in rural areas. Say, for example, if you are saying that we will take these shops in rural areas and we will create jobs as well as opportunities of getting better products in those areas, right? The consumer will get better products in those areas. So it creates wealth, it creates opportunities, it creates job employment opportunities in those rural areas. Therefore, you can still say that I am an eligible startup. So even though your business is nothing new, it is just opening up of shops, but opening up of shops in certain areas where job employment is required and job opportunities are being created, right? So employment generation or wealth generation can be looked upon. Or say, for example, if you are doing certain new services, new kind of services by sitting in India, wherein you are earning foreign exchange revenue. So in that case also, you may say that these are the services which are not probably required in India. However, these services are very much required in foreign countries, and while sitting in India, we can provide those services, and we are earning foreign exchange revenues. So this is also something which can classify as an eligible activity. Now, the last criteria is splitting up. We have seen many laws around splitting up, SCZ law, STPI, and all the other ATIA kind of benefits, wherein a new manufacturing setup was made or any new SCZ unit was set up. All along, income tax has been very much clear about this, that if you already had an existing business, if you already were doing some business and you just create a new entity wherein the assets and employees of the earlier business are transferred, and then you start the original business in the new entity, then that new entity would not be eligible for claim of any benefit which is being provided by the government for new age startups. So government says that it should not be an entity formed by splitting up or reconstruction of an existing business. So this is, we have seen many a time, a plethora of judgments are around, are available on these matters. This has been in existence in various forms and under various subsections of Income Tax Act. So the similar kind of principles apply, that not more than 20% of plant and machinery should be old plant and machinery. Your contract should not be old one, or your business, the owner should not be running the business erstwhile in some other entity form, and now you have just created a new entity form to get the benefits under the Startup India program. So all these criteria must be met. Even if one of the criteria is not met, you will not be considered as an eligible entity for getting startup registration. Or even after getting the startup registration, one of the condition is breached, or the government believes that you had misrepresented the facts while obtaining the certification, the government is has every right to cancel that startup registration at a later point of time. Right? And the turnover criteria is only the one criteria, which is a genuine criteria, after achieving which you will keep on retaining the benefits which were made available to you prior to reaching the threshold of 100 crore rupees, but will not be eligible after that. You'll not be eligible to gain any startup benefit after you have reached the threshold of 100 crore rupees. Right? So I have given a link of the notification which provides all these criterias in detail. Notification GSR 127E dated 19 February 2019. This was issued by DPIIT, right? So you can click on this link and go to the notification. Now moving on to entity registration process. Although we are all aware about what are the processes involved around setting up of a partnership, private limited company or LLP, but just to have a recap of all those provisions, to have it in one place, probably you will also have it as a repository to refer as to what is the registration process, and whenever you are advising to your clients, you may refer it to so as to advise as to what should be the entity form. And it is one of the very primitive, very foremost questions which we generally face from the client, that what should be the entity form which I should set up, whether it should be partnership, whether it should be private limited, or whether it should be a limited liability partnership. So while we run through the entity registration process, we will also understand that what can be the best possible entity form in what kind of scenarios. So first is the partnership form. Partnership is, as we all know, formed through a partnership deed, which is an agreement between two or more partners. They are just enter into a partnership agreement wherein all the terms and conditions of the partnership are mentioned. It is not necessary to get it registered, but yes, for Startup India benefit, a registered partnership firm is only eligible and not any regular partnership. So partnership deed needs to be executed on a stamp paper, and the stamp paper needs to be of the value as per the laws of the state government, because partnership stamp duty is a state subject. So different state have different stamp values. It may be 100 rupees, it may be 2000 rupees. You need to check which state you are situated in and what should be the stamp value of that stamp paper. Now, what are the general clauses which you should keep in a partnership deed? General clauses is first is the name and address of the firm as well as of the partners. What is the nature of the business, which we call main objects in the private limited company in the memorandum of association. It is similar to what we have nature of business. It need not be that elaborate as we have in memorandum of association, but a general idea of what the partnership is about to do with certain scope of expansion or enhancement of business activities in future. That is what generally we keep in the partnership deed. Then what is the amount of capital to be contributed by each of the partner? Then what is the profit and loss sharing ratio among the partners. It can be same as the capital. It may not be same as the capital. It is all dependent upon what is the agreement between the partners. But other specific details you can have. You can have interest on capital invested and drawings by the partner, any loans provided by partners to the firm. So it can be both ways. Interest to be given, to be paid to the partners in the cases where loan or has been provided or where the capital has been contributed. You can mention anything in the partnership deed. If you want interest to be paid on capital also, it can be mentioned. If you want interest to be paid only on current capital but not on the fixed capital, it can be mentioned. If there is any loan given by the partner and you want to pay interest, it can be given. Obviously, it may not exceed the threshold prescribed under the Income Tax Act, and generally a capping of 12% is provided on a basis of per annum interest. And similarly, if partner has made certain drawings overdrawn from a capital account and the firm needs to recover that back, you can also have provisions of getting interest from the partner. So all these can be mentioned: salaries, commissions, rights of each partners, including additional rights, right? Duties and obligation. What are the duties to be performed by each of the partner? Whether anybody is a sleeping partner, only an investing partner, who will run the business? Because in a startup ecosystem, there can be few people. One is the person who will run the show, basically, who will manage all the day-to-day operations. And some partners may be just, I'll invest money. I don't have any clue about the business. You manage the business, but the money would be mine. So there can be different kind of scenarios, permutation and combinations, which you need to understand from the client, from the founders of the startup, and then accordingly draft all the clauses in the partnership deal. Then there can be adjustment or processes to be followed on account of retirement or death of a partner or the dissolution of the firm, and any other clause which you may feel fit to be inserted in the partnership form, right? They can be clauses about admission of partner, or what is the payment which needs to be made, or what is the how you need to take capital from a new partner, how the goodwill is to be computed. All those things can be mentioned in the partnership deed if you wish to do so. Now, we know that registration of partnership is not mandatory, but for getting a startup benefit, for getting startup registered, your partnership firm must be registered, right? Registration of partnership firm may be done at any time. You may do it immediately after getting your partnership deed signed, or once you decide to avail some startup benefits, then also you may go for a startup registration. An application form along with fees required required documents need to be submitted with the registrar of firms of the state. So whichever state you are based in, you need to find out where the registrar of firms for that state is situated, and you need to apply according to the regulations and the rules provided by that particular registrar. Also, partners of normal partnership firm are exposed to unlimited business liability. So if you are engaged in a startup and if there is a fear of business losses to be incurred in the initial days, it might be prudent to advise the founders to say that, boss, if you incur certain losses, you may have to fulfill them from your personal finances also. It is not that your losses are limited only to the extent of capital which you have introduced. So partnership in that form is much more risky, wherein you'll have to think about that if they have to pay certain losses or pay to your vendors, which is in excess of revenues generated or the profit generated by the firm or the business, then they may have to fulfill it from their personal pockets. Then let's come to private limited company. Private limited company can be incorporated by at least 2 shareholders and 2 directors. The directors and shareholders can be same, but at least 2 are needed. And one of the directors should be Indian also, Indian resident. Directors need to obtain digital signatures and director identification number. Director identification number is similar to a PAN card, which is issued by Income Tax Authority, and director identification number is issued by Ministry of Corporate Affairs. So director identification number is also something which can be used by a designated partner of a limited liability partnership firm, right? So for the first step of company incorporation, you have to get a unique name approved from the registrar of companies. It has to be unique in terms of both the noun, the first name of the company, as well as it should reflect what business you will be engaging in. Say, for example, if I want to start a business of an automotive company, I may mention Anshul Automotives Private Limited. Or if I want to do garment business, I must mention Anshul Garments or Anshul Clothing Limited, Private Limited, right? So it should be first, Anshul must be a unique name. Anshul should not be something which, Anshul Clothing should not be something which is already there in existence. So you will not be able to get that name. So your first name should be unique, and then your second name, word of the name should reflect the business which you will be engaged in. Then you have to draft memorandum of and articles of association. Memorandum will contain all the main objects, all the other objects, your capital, right? Your subscribed capital, authorized share capital, all those things. Whereas article of associations will have the details of how the business will be run, how the board meetings will be conducted, appointment of auditors or any special rights of shareholders, right? All those things can be built up in the articles of association. Now, there are many cases wherein shareholders or the founders enter into some shareholders agreement prior to incorporation of a company, and where they all agree about their rights, obligations. If you have heard of tag along rights, that if I want to sell my shares, I will have to also necessarily ask my other shareholders to sell the shares to the same person who is buying my shares. So this is called tag along rights. Then right of first refusal. If I have to sell my shares, other shareholders may insist that I must sell my shares to them only. And if they are not able to pay me a fair market value, only then I will be able to offer it for sale to any third party. So all these kind of rights, right to appoint directors, right to have a nominated director on the board of directors, right? All these rights can be mentioned in articles of association. So therefore, drafting of memorandum and articles of association is very important. Many a times on a later stage, when the angel investors or the venture capital funds are investing into the company, they also force you to change the articles of association according to the shareholders agreement, which is entered into at a later point of time. Certificate of commencement of business need to be filed before starting off operations. Basically, it is Form 20 AC, I think, which needs to be filed with the registrar of companies, which is a declaration that you have opened up a company and you have also introduced the subscribed capital by each of the shareholders. And once you have subscribed to the initial share capital, only then you can start the business operations of the company. Not prior to that. In earlier days, few years back, once the certificate of incorporation had come in, a private limited company could start off the business on that day itself. But it's not the case right now. You have to first open up a bank account, put in the money in the bank account, and attach your bank statement as a proof that yes, share capital which was subscribed in the memorandum of association has been put in by each of these shareholder in their respective ratio. Also, one must be aware that a private limited company has maximum threshold of shareholders, which is 200. This is apart from ESOPs, which are issued to employees. Why this is important to know in a startup ecosystem is because many of these startups in the initial stages of their businesses raise funds through angel investors. And angel investors are individual persons who are making very small amounts of investments. It can be as low as 10,000, 20,000 or 50,000 rupees. Obviously, there are a number of shareholders. Say, for example, each person is investing 10,000 rupees. So even if 100 people come together, they will be investing in 10 lakh rupees only. So therefore, you must be careful that if you are issuing shares to a large number of people, large number of angel investors, you are reducing the your elbow room to induct more shareholders or to induct future investors into your company. So the lesser amount of money you are taking from a shareholder, from an angel investor, the lesser the opportunity for you to offer shares to other shareholders at a later point of time. So therefore, you should be careful about the minimum threshold of 200 shareholders, which should not be breached in any case. Now coming to limited liability partnership. Limited liability partnership, as the name suggests, it's a hybrid of partnership and a private limited company, wherein the partnership is incorporated similar to a fashion in which a normal partnership is incorporated through a partnership deed. However, it is governed by Ministry of Corporate Affairs through Registrar of Companies, wherein the incorporation process is almost similar to an incorporation of a company, wherein you have to, the directors or the partners have to obtain digital signatures, they have to obtain director identification number, you have to go for a unique name approval prior to incorporation, right, with a descriptive word in its name. And it is almost similar. However, the memorandum of association or an article of association is not there. It is just a simple partnership deed which you need to execute on a stamp paper and then upload it after the incorporation has been done. However, a good part of LLP is that there is no threshold on the number of partners which you can have in a LLP. So partners of LLP have limited liabilities to the extent of capital contribution also. That is also a plus point as compared to a normal partnership. But obviously, a normal partnership comes with the least amount of compliance, right? You need not do any statutory audit, you need not file any annual returns, you need not to declare shareholding or capital contribution anywhere. You just need to file tax returns, your GST returns, and if you have crossed the threshold of tax audit, you need to get your tax audit done. Whereas in limited liability partnership, if you cross the threshold of 40 lakh rupees of turnover, you will be required to get your statutory books of accounts maintained and audited. You will, in any case, whatever your turnover is, you need to file certain annual returns, certain documents with the registrar of companies, right? You need to intimate any change in the partnership deed to the registrar of companies that need to be filed. So all those compliance requirements are there, but obviously these are lesser than a private limited company. So on a compliance front, partnership is the easiest, limited liability partnership is in the middle of the thing, and private limited company comes at the end of the tunnel, wherein the compliance requirement is the most stringent and the most comprehensive one, right? There you need to get your statutory audit done even if you don't earn a single penny, even if you have not earned a single rupee of revenue, you'll have to get your accounts audited by a statutory auditor and file all the annual returns, conduct board meetings, 4 board meetings in a year at the desired interval in between, right? There can be matters which can only be decided in the annual general meeting, which needs ratification of shareholders. So all those things, all those compliance requirements are there. How to introduce share capital, how to withdraw dividends, how to withdraw money, taxation requirements are also stringent, right? So all those things need to be considered. So private limited companies at the farthermost, the most toughest one. Partnership, normal partnership is at the lower end, which is the most easiest one to comply with. In limited liability partnership, as I mentioned, it is incorporated through Ministry of Corporate Affairs. Post incorporation, once you get the certification of incorporation, you have to file the LLP agreement within 30 days with the ROC. LLP agreement should be consisting of similar clauses as we discussed in partnership deed. And the last one is there is no limit on the number of partners which you may induct in a limited liability partnership. It has lesser compliance requirement as compared to the private limited company. So, Sambit ji, is there any way we can have some queries from the participants, if it is possible? Ram, are you there? Ram, is there a way where we can ask participants to raise questions if they have any? हाँ जी प्लीज. आपने कुछ भेजा राम? हाँ जी. Request presenter to explain basics of startup to know fully before entering topics of registration. Sir, basics of startup I have explained. I have explained all the criterias of the entity which you need to register, right? So if you have any specific query which you need clarification on, I would be happy to answer that. But I have mentioned all the criterias of startup which you must be fulfilling, and only then you can get a startup registration. Startup India program and the benefits which are available to a startup, we will be dealing in later slides as we progress in the session. Anil Kumar is asking, can only corporates start startups? Can only corporate start startups? So Anil ji, it's not that corporates can start startups. It is the entity form you need to have in a corporate form. Basically, you need to have partnership, or you need to have a limited liability partnership, or you need to have a private limited company. However, please be careful that Startup India DPIIT has issued certain guidelines according to which if you have a corporate partnership, means say for example, I am a private limited company and I enter into a partnership with another private limited company and get a LLP incorporated, then that LLP will not be eligible, because they have mentioned in the guidelines that only natural persons who are the shareholders and who should be shareholders or founders of the startup. So if you already have a corporate investor, if it is only in the form of investor, then it should be fine. But the corporate investor should not be holding more than 50% of the shareholding, right? So corporates may not be able to start startups. They may not be able to incorporate a company and get the startup benefit. But if I, as a natural person, am willing to incorporate a company or enter into the startup ecosystem, I must enter into it through a corporate form. It can either be partnership form, it can either be LLP, it can or it can be private limited company, right? Hope I have made it clear. So Vikas Anandji is asking, startup and how to manage more and more staff and office work. So I feel this is an administrative query. How to manage more and more staff and office work. This depends upon the capabilities of a particular person. Obviously, there are ways and means wherein you can streamline your processes through defined set of HR policies, your work policies, your work ethics. All those can be defined, and responsibilities can be fixed upon your middle management staff to manage the work of lower person. Then you have to manage the work of your middle management. All those things you can do to manage more and more staff and office work. But sir, this is something which is all pervasive. This applies to a startup and as well as to a main course business, main business also. So if anybody is engaging into a business or any kind of work, they will have to face these challenges. Pankaj Bagora ji from Rajsamand is asking, any registration required to get CPR credit? Oh, sir, Sambit ji will be able to tell you CP credit के लिए क्या करना पड़ेगा. शाह कमलेश्वर जी, राम आप एक बार देख लीजिएगा, क्वेरीज जो हो वो स्टार्टअप से रिलेटेड हो वो आप मेरे को शेयर कीजिएगा. मिनिमम क्वालिफिकेशन फीचर्स ऑफ स्टार्टअप. सर मिनिमम क्वालिफिकेशन सच फाउंडर्स के लिए कोई क्वालिफिकेशन क्राइटेरिया नहीं है. आप एजुकेटेड हैं नहीं हैं, बट इफ यू विश टू एंगेज इन अ बिजनेस एंड इफ यू हैव बिजनेस आइडिया, around which you have incorporated the entity form, which I have just mentioned, then you can apply for the startup. Obviously, the DPIIT authorities, they will definitely look upon your experience, your educational background, but it is not a strict criteria to evaluate your application. अगर किसी फाउंडर के पास एजुकेशनल बैकग्राउंड नहीं है बट उनके पास एक्सपीरियंस है, वो काम कर चुके हैं, और उनको उस पर्टिकुलर इंडस्ट्री के बारे में पता है एंड ही नोज हाउ टू रन दैट बिजनेस, ही कैन डेफिनेटली गो एंड अप्लाई फॉर अ स्टार्टअप रजिस्ट्रेशन. स्वामीनाथन, आई फ्रॉम डोंबिवली से पूछ रहे हैं, वेदर सिंगल क्राइटेरिया ऑफ एम्प्लॉयमेंट जनरेशन अलोन इज एलिजिबल फॉर स्टार्टअप रजिस्ट्रेशन. यस सर स्वामीनाथन जी, वेरी मच. If employment generation is something which you can demonstrate and projection with sustainable projections or with reasonable projections, that yes, you will be able to generate good employment opportunities for people around your business, then you will be eligible. However, it's just a matter of how you communicate it and in what sense you are able to pass on the message, that how will you be creating and what kind of employment opportunities will you be creating in coming years. Right, we have not started e-invoice till now, till May 15. What to do now? Sir, ये GST की query है, probably जब हम कभी GST का सेमिनार ले रहे होंगे तो उसमें इसको एड्रेस कर लेंगे. Role of CA in helping startups, MSMEs in taxation matters. Sir, role of CA ये पूछ रहे हैं G. Nana Prasad from Bangalore. Mr. Prasad, CA has a very important role in advising founders, because from my experience, I can tell you that the people who are coming and starting up these startups or who are engaging in these new age businesses, they are technocrats. Technocrats means they are experts in technology, they are expert in running their businesses. However, they are not aware at all about what are the possible benefits which they can avail in the income tax, or what are the nuances which they should be aware about while running their businesses, because they are directors, they are shareholders of the company, so they come with fiduciary responsibilities as well. And therefore, as a CA, it's our responsibility to advise them that whatever benefits they can claim under various schemes of the government, and also to make them aware about the responsibilities which they carry on their shoulders by the virtue of being directors and shareholders of a company or an eligible startup. Say, for example, if they are issuing shares to new investors, angel investors, through a private placement offer, there is a requirement under Companies Act that you must open up a new bank account and get the money in a new bank account until the time all the compliance requirements of issuance of shares are not completed. That money should not be used for any business purposes. Now, if this compliance requirement, if this simple compliance requirement is breached and not fulfilled, the penalties can run into crores of rupees, right? So for a very small startup which is just issuing 2-3 lakh rupees of new share capital, and if they breach this condition, you can see that what kind of exposure they are sitting in. Say, for example, if they are issuing share capital at a very high premium and they have not obtained startup registration, they are exposed to angel taxation, which is under section 56(2)(7)(b), right? The excess premium over and above the fair market value would be liable to tax in the hands of the company. So we must make them aware that these are the risks, and there are opportunities also. That if you get the second stage registration, we will be talking about the different stages of registration of startup. If you will get a second stage registration, you can also be eligible for a 3-year tax holiday, right? But and also if you get the first stage registration from the DPIIT, you get a lot of benefits from state governments. You get to get incubated with state government incubators. You get to be eligible for the Seed India Fund scheme. You get to be eligible for lesser tender requirements in government procurement. So there are so many things. In patent, you can get certain concessions, patent registration, right? So all those things we must be aware. We, as a chartered accountant, we must be aware, and until and unless we are aware about what are the benefits available, we won't be able to advise our clients appropriately. Now, Vinod ji from Vishakhapatnam, registration procedures are lengthy and tedious. Do you think whether the same will be a hindrance to startup eco space? Sir, once a company or a business has to avail certain benefits of the government cannot distribute these benefits without managing or without having any, any tab on the businesses of these companies. So if a benefit is coming forth, there has to be certain conditions attached to it. Otherwise, there is a big chance of misusing the benefits because India is a very huge country with big population. And you would imagine that even with all these startup registrations and processes being in place, in last 6 years, more than 68,000 startups have already been registered in India, right? 68,000, more than 68,000, and which is nearing to 70,000 mark within just 6 years of the program. It talks a lot about what kind of startup ecosystem we are witnessing, right? Almost more than 10,000 startups per year. So that has not faded away any spirit in the entrepreneurs, and someone who has to do a business will have to go through these rigors at least. Santosh Pai ji is asking from Kozhikode, startup registration is available for partnership firm. However, IT exemption benefits are not available for firm, only for LLP. Yes, here you are very correct. When we will come to the benefits, tax benefits, we will be making this differentiation and we will letting the audience know that what benefits are available to which entity form. So the IT benefit is only the income tax holiday which we are talking about, right? But if you want to avail certain other benefits from state governments, say for example, your patent registration concessions, your support from incubators or your electricity bills, there are state governments which say that we will reimburse you certain part of your GSTs. All those benefits are still available to a registered partnership firm also. Chintanji from Mumbai is asking, I want to start a food processing product business related to health and diet, manufacturing, processing, branding, selling, D2C, B2B, B2C. Will that be eligible for getting startup? To my mind, yes, it may get, but you need to justify that whether the health product, whether the dieting solutions which you are coming up with, are they something innovative, right? Have they improved upon the processes which somebody else might not be following? Or are you creating employment opportunities for people around you? Would you be creating a lot of opportunities in terms of gig workers being employed with you? Would you be delivering your products at home? Or if you are setting up a manufacturing unit, how much employment will be generated there? Or wherever you will be putting up that manufacturing unit, will that create certain wealth in and around that particular place, right? So you need to put in a thought around your business model, and you need to make your business activities fulfill the conditions of eligible activities. Once you will think through it, whether you are doing anything innovative or not, may not be a product. Your product, if you are saying that you are into food processing product, right? So whether your food is something which is new kind of a product, which can create health benefits to people, that is something one. If you are improving upon the process of manufacturing or delivering the goods, that can be the second thing. If you are creating employment opportunities through your manufacturing unit or through the workers you are employing in delivering the products, that is something. Or you are employing nutritionists which can provide guidance or which can provide paid services to people who want to improve upon your health, that can be the fourth one. Or if you are creating wealth around your manufacturing unit, or for your stakeholders, for the people who are working with you, all those things can be put across to get your startup registration. Then the next query is from Girish. Startup can be considered for opening new branch of established business. Sir, if it is an established business which in itself does not qualify as a startup, then a new branch of the business will not qualify as a startup. it has to be a separate legal entity, and that too which is not set up by splitting up or reconstruction of an eligible business. So that is one of the criteria which I discussed in my presentation earlier. So we have to be very careful. If it is an established business already running and which does not fulfill the criteria of startup, then it cannot be classified as a startup. Although if you have a startup which has not, if you have a business, running business which has not crossed 10 years from the date of incorporation, which fulfills all the conditions of a startup, which has not breached the threshold of 100 crore rupees of turnover, and if you are incorporated as a private limited company, LLP, or a partnership firm, and when it was set up in the earlier stage, it was not set up as a splitting up or reconstruction of an existing business, then still you can go and get yourself registered as a startup, even if you are operating in your 6th, 7th, or 8th year of business operations, right? So you must see whether you are fulfilling the criteria, and it doesn't matter that you are already an established business, but you need to see whether I am fulfilling the criteria or not. Raju is asking, Delhi is an entity engaged, Raju from Delhi, is an entity engaged in stock market related activity be registered as a startup? So you need to see whether you are making a cut in the kind of eligible activities, whether you are doing anything innovative, if you have created any software which is based around algorithms and which can create much more wealth opportunities for the traders or for the investors in the stock market, and if you are providing that platform as a service, right? So that can always be a business which is eligible. However, if you are only engaged in plain vanilla stock trading, intraday trading, futures and options, and you have just registered a company for doing these traditional businesses, probably in that particular scenario, you may not be eligible to get a registration under the startup benefit. Again, from Swaminathan, there is a query: construction company doing mainly stalled projects with normal labor, as is done in any other company, will qualify for startup. Sir, it may be difficult if you are just taking up stalled projects from some other companies and running it and completing it on your own. It may not be, to my mind, it does not seem to be a very good fit for startup registration. However, if you say that why I am able to do so, there is a certain process which you have developed in the construction arena, or if you are using certain new age low cost material to complete those projects, and if you can justify along with that you are also creating employment opportunities on a large scale, or if you can say that you are giving employment to the labor which was employed on those projects which have been stalled. So you need to build a story around it. You need to yourself visualize whether you are fulfilling any of those criteria which I have mentioned in terms of eligible activities, and then you will be able to decide on your side itself whether you will be able to get the benefit or not. Then we have got a query from Neha, Jaipur. Is KPO or BPO be called as startup? Very good question. KPO or BPO may qualify as a startup, depending upon, you need to showcase that you are generating wealth. Now KPO or BPO can be considered to generate wealth. Why? Because if your KPO is, say for example, catering to foreign clients and foreign customers, then you can say that whatever services we are providing, we are earning in foreign exchange, and by earning in foreign exchange, we are actually creating wealth for Indian economy. So I'll give you an example. A startup came to us. They were into writing codes of e-games. They were not launching their own games. I'm talking about 2018 and 2019. They were writing codes and they were designing the user interface of e-games, and that too not for Indian e-gamers. They were doing it for companies who were based out of Europe and USA, predominantly in Los Angeles and Las Vegas and Malta right? And in various European companies, there are a lot of casino games which are legal, which can be played. So this company, what it was doing, it was giving employment to mathematicians and statisticians, because while you are putting a casino game which revolves around luck by chance on the numbers, you have to put in a lot of algorithms in behind that code. You have to put in a lot of statistics behind that code. And once those mathematics and statisticians have written all those algorithms, then comes the job of coders, the code writers. They will encode them into a game. And also they were employing designers, the creative designers, to create a user interface which is attractive for the customers of those casinos. And those e-casinos are also famous there. So they were creating these electronic games. So now they were not registering any of these games in their own name. They were not the rightful owners. They were not having any IP. They were not doing anything new, right? So they came to us for general accounting and tax services, right? And we asked them that, why have you not considered yourself as a startup? And there were two founders, and they said that we are not doing anything innovative. The Startup India program is all about innovation of product or innovation of processes. We are not doing anything. We are just writing simple codes. And then we did some study around it, and we found out that the e-gaming industry globally had a potential of reaching $100 billion at that point of time. And there were not so many Indian players who were writing codes for foreign companies, right? So, and when we looked upon their financials for the first year of their incorporation, it was a very good amount of turnover which they have created. They had already created in foreign exchange. So there we created a narrative. We created, we helped them out in putting out their story in a way which would justify themselves to be registered as a startup. Why? Because they were creating wealth for India, because they were earning they were earning foreign exchange. They had got a significant amount of turnover in the first year of their incorporation itself. They were giving employment to mathematicians and statisticians in a very unique way, not a traditional kind of an employment. They were engaged in writing codes and helping the code writers to create games. Then they were also giving, they were all conjoined kind of an effort. They were also giving employment to graphic designers, right? And they projecting of employment was not a very huge employment. They just projected 60 to 70 employees of high-end employees to be created in just 3 years of time, right? So that with that kind of projection, we went ahead and filed their application with the DPIIT, and we got the DPIIT registration. And we then filed for the second stage registration before the interministerial board. And we were all surprised that we got the second stage registration also for this particular startup. And you will be, the data is very skewed. As I mentioned that there are more than 68,000, 69,000 startups which are registered under the DPIIT as first stage startups. But the startups which are eligible to 3-year tax holiday, which we all know as 80IC deduction, the 3-year tax holiday is only available to less than 500 startups as on date, even after 6 years of launch of Indian Startup India program, right? So that is the kind of lesser number of or more careful the government is in granting the startup benefit to 3-year tax holiday to startups. That against 70,000 odd startups, there are only less than 500 startups which have got the tax holiday. You can see that the percentage is less than 1% of the total startups. And would you believe it that the startup which was not even thinking about getting the first stage registration, and they even got the second stage registration from interministerial board. So it is something which you need to think about. You need to consider the industry which they are operating in, the kind of business projections they have. They need not be exponential. Please be mindful that if you make unreasonable assumptions in making your claim or projecting your business in coming years, the government department is obviously going to not entertain your applications, right? So we must be prudent in making our assumptions and projecting our numbers. So I hope that I've been able to explain whether a KPO or a BPO can be called as a startup. You need to think upon what kind of services are you rendering through that KPO, what kind of services are you rendering through BPO, whether you're creating large scale employment or unique kind of services, or if you are earning in foreign exchange, probably that can be a good case of getting a startup registration. We have got a query. Raju is setting up an educational institution be regarded as startup. Sir, let's अभी ये तो बहुत सारे businesses हैं. If we keep on discussing every business, तो वो सारा queries इसी में निकल जाएगा. Probably I have given you the entire background of how you need to apply, what kind of application of mind you need to have on the terms of business activities you are carrying on. Just apply those criteria which I have just mentioned and think through yourself whether you will be fitting in these particular criteria or not, and whether if you were a DPIIT member, whether you will allow such a registration to be such a business to be registered as startup, given the defined definition, given the defined criteria which have been provided for, right? Can startup registration possible only if private limited newly registered, or it can be taken for a company already registered in FY 14-15? Sir, Saurabh ji from Ahmedabad is asking whether startup registration can also be taken for a company which was registered in financial year 2014-15. Yes, you can definitely take it because your 10 years have not yet expired from the date of incorporation. And obviously, you must also fulfill all the other criteria. Your turnover should not be more than 100 crore rupees. Your activities, business activities should be such which are within the framework of definition which I have just mentioned: innovative, development of new product or processes, or creation of employment or creation of wealth. So if you are fulfilling all of these criteria, and when you had set up this business in 14-15, it was not set up through splitting up or reconstruction of an existing business. If you are fulfilling all these criteria, you can still go to DPIIT and ask for a startup registration. However, also let me explain you, although it was to come in later slides, this startup benefit you will only get a first stage registration. You will not be eligible for the second stage registration of from interministerial board, because under ATIAC and for the second stage registration, the condition is that you must be incorporated after 1st of April 2016 and not prior to that. So for the first stage registration, you can still go, but not for the second stage registration. Prem from Bihar is asking, can new hospital take startup benefit because it is creating employment opportunities? Sir, if you feel that it is creating employment and if you can communicate your message in the application, you can definitely apply for it. Lahu Raj from Pune is asking, a proprietary firm in a manufacturing business registered before 2 years is converted as private company. Is it eligible for registration as a startup? Sir, it might be difficult because the company setup may be considered as setting up by reconstruction of an existing business. So this might be a challenge. Therefore, whenever we say that you should, if you are looking towards getting a startup benefit, then at the day one itself, you get into a company firm or get into a partnership firm. If you start the business in a proprietorship firm and then convert it into a private limited company, there may be challenges. Would professional firms entitled for startup, example, CA office, startup offices, doctors, starting hospitals or clinics? Sir, there is no restriction as such. Obviously, a CA office need to justify that what they will be doing, how they are creating employment, how they are creating wealth, right? And if not, are they improving any processes or developing any new product? So all those criteria need to be fulfilled. And if you feel that a new CA office or a new architect office, you can justify those criteria, you can definitely go for it, because there is no restriction on professional firms for getting these benefits. I have private limited company incorporated last year. This is query from Chandrakant. Should I wait for an entity to be profit making and then apply for startup, or should I go ahead at present day to apply for startup recognition? At present, government support is not required, hence postponing it considering the above as tax planning. Please advise, is it a good strategy? Okay, this is a very good question, Chandrakant ji. Chandrakant ji is asking that if I am a loss-making company as of now, as I have just started up, whether it is a good idea to get this startup registration now, or is it something which I can get later on? So Chandrakant ji, the first stage registration, which is given by DPIIT, you can go for it as soon as you're possible, because there is no such restriction that you should be profit making, and also the first stage registration does not give you any benefit in terms of tax holiday. That is only when you get the second stage registration, which is from the interministerial board. So why you can go for the first stage registration is it gives you exemption from angel taxation, right? Now, if you are a loss-making business, you may be willing to raise funds from angel investors or from venture capital or from your own self or from your family or friends at a premium, because you may not be willing to part away with a lot of share in the equity with small funds coming in. So you may want to issue shares at a premium. And if the premium is not justified with the valuation which you are asking for, it is always good to go for the first stage registration, which will give you exemption from angel taxation. Obviously, there are certain terms and conditions subject to a declaration be made in Form 2, which is required, which we will be discussing later on. So if you get that registration, you will also be eligible for various benefits under the state government schemes, right? Like if you participate in certain startup events, various state governments have come up with reimbursement of 50,000 or 1 lakh rupee to the extent of amount which you can claim from your government. Then if you file for a patent, you can ask for reimbursement of patent fee, and you can ask for assistant also. If you are a registered startup, you can go to a state-owned incubator and ask their assistance in terms of mentorship, in terms of some space at a concessional rate, right? So there are so many benefits which can be available to you under the state and central government action plans, which you can avail from the first stage registration itself. And also, if you want to go for the second stage registration also, you can go for it, because that is available in the block of 10 years from the date of your incorporation. So say, for example, if you believe you will not be making profits in the initial 3 years, and the next 3 years will recoup the benefits of the first 3 years only, then you can start the tax holiday from the 7th year till 9th year, 7, 8, 9, 3 years consecutive years, you can claim tax holiday, right? So it is not that once you have got the registration, the 80IAC registration, it is mandatory on you to claim the tax holiday from that year itself. It is not. It is your option to claim tax holiday as and when you deem it fit, right? So I hope this is clear. Let's move on. Geetu ji, sir, under which act startup is recognized? Sir, this is Startup India policy, Startup India action plan. Under this regulation only, it is recognized. I'm not sure whether there is any act on this particular framework. This is recognized by the Department of Promotion for Industry and Internal Trade, which is DPIIT, and it comes under the Ministry of Commerce. Within how many years of incorporation one can apply for startup registration? Sir, till the time 10 years are not expired, you can apply anytime. One person company can also be the constitution of the startup. Sir, no, it has to be a private limited company with 2 shareholders and 2 directors. One person company is not eligible. This was question of Sunil ji as well as from Gurgaon and Raipur. There are 2 Sunil ji. Sunil, one from Raipur, one from Gurgaon. Both had 1 person company question. Then again, another question is from Naresh Batra ji from Ludhiana. What is difference between Stand Up India and Startup India? So, these are just nomenclature. Stand Up India, Startup India. Startup India is the program. Stand Up India is just a tagline which it says. The government says that Stand Up India and Startup India program. Otherwise, the legal framework under the Ministry of Commerce, it is Startup India program. What is the possibility of startup in capacity of proprietary firm? Sir, it cannot be allowed. Vinod Kumarji had asked this. Shravan is asking from Noida whether OPC will get advantage. No. Raghavendra, can we have a glimpse of FEMA compliance to be followed by startup receiving foreign funds? So probably let's keep it for some other time. FEMA compliance is almost similar to what you have to fulfill in a normal FDI. Form FCGPR needs to be filed, and you need to see whether your company is into eligible business, compliant to the automatic route under the FEMA regulations or not. Ronak from Mumbai is asking, if a private limited company is formed and registered under startup, and after that a limited company takes 50% shareholding, then also is he eligible to take benefits of the startup? Sir, as of now, what we are facing is that if a corporate has taken over, if the company is a subsidiary of a corporate entity, then you are not eligible to get the startup registration. However, if you have already obtained a startup registration and after that you qualify, you are taken over by a corporate, probably in that scenario, you may not lose the benefits of a startup. However, this is something which is a gray area as of now, and the regulations are not very clear on this. So let me tell you, also clarify again, that if you are already a corporate subsidiary, before applying to the authorities for a startup registration, the startup authorities are going to reject it at the first instance itself. However, if you were owned previously by individual shareholders, promoted by individual shareholders, you got the startup registration at that stage itself, and later on you were acquired by a corporate, or you may say that investment was made to an extent that more than 50% shares were now vesting with the corporate. In that scenario, you may still remain eligible as a startup. However, as I said, that the regulations are not very clear on that aspect as of now. Now this Meet is asking, can only innovative idea be converted into startup, or general business can also register? Sir, I have given ample examples. A general business can also be registered as startup, provided that you can prove that you are generating large scale employment or you're creating wealth, right? So those aspects you need to fulfill. Abhishek from Hyderabad, do you suggest simple partnership as entity form or a private limited company for startups given the stringent compliance requirements? In the initial stages, the focus is generally on big idea and growth potential rather than compliance formalities. Sir, Abhishek ji, if you ask me, it is very difficult to convert at a later point of time. So if a thought in the founder's mind is that at some point of time they have to raise capital, if they have to raise funds to scale up their business model, it is always advisable to go with the private limited entity format from day one itself, because once the investors are ready to invest in your company, it will be very, very time taking and time consuming process to convert your partnership firm into a private limited company, and that may eventually result in losing the opportunity of investment, right? And if you feel that the compliance requirements are quite tedious in the initial stages, please consider that as an investment. Consider that as an investment in your business, because let me tell you, I have seen a lot of businesses failing the investment rounds and losing the opportunities to raise funds because they were not initially incorporated as a private limited company. Also, conversion from a partnership to a private limited company comes with certain tax implications. Your GST, all your PAN numbers, registrations, all need to be transitioned. That can be much more tedious, that can be much more complicated than just going through certain compliances for 1 or 2 years in a private limited firm, a private limited company format, right? So my advice is that if at any stage of business you want, or if you have envisaged as of now that you will be requiring funds from third-party investors, please do not go with partnership firm or even with limited liability partnership. Limited liability partnership is also not able to raise funds in a normal startup ecosystem. I have not seen any LLP raising substantial or significant amount of funds from any kind of VCs or angel investors so as to make a substantial business. So if and on the other hand, if you feel that my business is going to be a sustainable business. I am not going to raise funds from any third party. It is going to be just between 2 or 3 founders, the initial founders. Go for a partnership. This simplest and the safest form to do business. Can any existing entity fulfill all the criteria be eligible to apply for startup? Sanket ji from Durg. Yes, sir. As I mentioned, if you have not completed 10 years from the date of incorporation and if you fulfill all the criteria, you can still go for first stage registration. However, if you want to avail second stage registration from IMB, you have to be incorporated after 1st of April 2016 and before 31st March of 2023. Abhishek from Hyderabad, is there any definitive criteria who can be promoters or shareholders of the startup entity? Sir, as of now, DPIIT only considers natural shareholders as the founders or the promoters, and they have defined that you should not be a subsidiary of a corporate. So they have restricted the corporate investment below 50%. So if you have investment below 50%, and if you have 2 or more promoters who are running the businesses and who own more than 50% of shareholding, DPIIT will issue you a certificate. Dilip Matai from Jaipur, can a practicing CA be a founder of a startup? Is a founder of a startup having CIBIL problem, then further LLP is facing financial problems? Sir, a practicing chartered accountant, to my mind, can invest. You can definitely hold shares. However, you may not be able to engage in day-to-day activities or be a director of that company. Founder means shareholders, to my mind. That is what I understand in a general parlance. You can definitely hold shares as a practicing chartered accountant, but you cannot be a director, or you cannot engage in day-to-day activities of running that startup. That is what I understand. If you are investor, you can obviously employ certain people to run that startup or be on the board of the startup, and then you can apply for the startup registration also. Sir, financial problems तो आ सकती हैं. If founder का CIBIL है, तो probably it may impact the CIBIL of the company also. Hi sir, whether a software company who is providing, this is from Karthik, providing SAP services to foreign entities eligible for startup registration? It may be. You under the wealth creation criteria, you may consider applying yourself. Then we have Darpan from Mumbai. If any startup receives certificate eligibility stage 2, then that company exempted from MAT under section 115 JB as well. So you can always opt for the new benefit if you want to be exempted from new regime, if you want to be exempted from MAT. However, to my understanding, MAT is not exempted. 115 JB is not exempted if you are only availing 80 IAC deduction. So 80 IAC deduction is under the normal provisions of the Act. So you may end up paying MAT. However, MAT credit will be allowed. And if you end up being in normal provisions of tax after the 3-year time period, you will be getting that MAT credit. Kapil Verma from Gurgaon. Normally, how long should it take to get a startup registration in any form? Explain partnership firm. Sir, partnership firm registration is the normal thing. Just sign a partnership deed, it is done. LLP, private limited company, the time it takes with the registrar of companies, that is the time it takes to get the company registered. And after that, once you apply for the startup registration with DPIIT, now we have seen DPIIT gives you a registration generally within a week's time. 5 to 7 days is the time period generally in which you get the registration if they are satisfied, or you will get some queries if they have any, or you will get a rejection notice also. So DPIIT is quite fast. However, the second stage registration of interministerial board, that takes certain time, because their secretaries of 3 ministries are empowered and form part of the panel which listens to the not listens but who examines all the applications and then decides upon it. And the meetings of interministerial board are at the discretion of these authorities. So the second stage registration, approval or rejection you may see a time period of 4 to 6 months generally. That is what we have seen in the past, right? So that is what the time frame is. Ravi Shankar from Bangalore, apart from income tax benefit, is there any preference given to startup in government contracts and allotments? Yes, Ravi ji, we'll discuss it later on. Generally, not preference is not given, but relaxations are given. Relaxation in terms of there are generally turnover criteria, there are generally prior experience criteria which are prescribed in government contracts, right? You may have to deposit certain earnest money for tenders. In tender document, please look towards what are the exemptions which are given to startups. So you may not get preference, but you may get relaxation in the terms and conditions for applying to a tender. And obviously, it depends upon certain governmental authorities and policy of the state government or the state government for a particular, say for example, if they are coming up with a new innovative project for which they want startups only to come forward, you may get a preference also. So you need to look towards the tender document for finding these benefits. Narayan from Palakkad, can a startup be also registered as MSME unit as well and avail benefit? Absolutely yes, Narayananji. Startup can also get registered as an MSME, which is now called Udyam registration, and avail the MSME benefits, which are whatever is available to you. So this is not mutually exclusive. Startup and MSME registration can be done together. Surbhi from Palghar is asking, what if anyone has accidentally have a similar innovative startup? Will that affect to anyone or both these startups, or is trademark necessary? How to overcome problem like this? So if you have a similar kind of a startup, you need to showcase that. So trademark and anything is not related to startup registration. DPI authorities are not looking at your trademark registration. So that is something which is gone. You need to showcase that you are already involved in certain business. However, you have to clearly demonstrate that whatever business you are doing in the earlier startup or the earlier company which you have incorporated, it is not something which is being diverted from that entity to the new entity. You need to showcase that the customers in the new company will be new, the employees in the new company will be new, the plant and machinery in the new startup will be new. So if everything is new, although the idea or the business might be same, but if you are employing new persons, if you are installing new plant and machinery, in terms of plant and machinery, even though your computers and your softwares or your furniture, means if you are making new investment in this particular startup, then you can very well say that this is not formed by splitting of the existing business or reconstruction of the existing business, right? So this is how you need to think through and move ahead. So I think we have had a lot of queries right now. Let's move on. We'll discuss the queries later on. Let's complete the presentation which I have for you all. What are the other business registration? Permanent account number, TAN account, GST, Shops and Establishment Act registration. This is one of the registration which generally people are not aware about. So this is something which you can look towards. Import-export code. If you are engaged in export of services or export of goods, it is always good to have IEC code, because if you are in export of services in terms of KPO or BPO business, you may be eligible to Service Export Incentive Scheme, a subsidy from the Indian government. And that subsidy is only available if you are having import-export code. So please be mindful of that. Then you have Udyam registration, optional. You can go for it. Startup registration, optional. They can both coexist. Registration with PF, ESI authorities, as and when you go above the threshold of number of employees, 20 employees, if you reach that. Your trademark, your trade name, your logo registration, everything is optional, but it is good to have all these registrations in place so that nobody else is able to use your trademarks for their own benefits. And registration under any other specific business law. So for example, if you are going to set up a food factory, as was one of the queries, you may need registration from FSSAI, right? If you are into chemical business or if you are into leather business, you may need certain registration from pollution industry or pollution clearances, or you may need to set up an in-house water treatment plant. Right. So whatever business you are engaging in, please also see that whether a specific business license is required to carry on that business or not. Now coming on to startup registration process. Eligible startup need to apply for DPIIT for being registered as startup, and a startup of certificate of registration recognition will be provided. Only when you get the startup certificate of recognition, you will be classified as a startup. Then on a second stage level, you can also go for an interministerial board registration, which will make you eligible for getting 80 IAC 3-year tax holiday, right? And it is generally called certificate of eligible business from IMB. Now, what are the information required? What is the information required to get yourself registered with DPIIT? First of all, you need to create a login account with startupindia.gov.in. Please be mindful that all the process is electronic. There is no physical interface. You don't even get to know which officer is looking into your application and who is going to respond to it. So you need to create the login ID through that email, which you can access on almost on a daily basis. Right, because if any query is to come, it will come to that registered email ID only. So please be careful while making a startup, making a login ID, because all your future benefits, everything in future will be linked to that email ID only. Right, so you may create a generic email ID which is available to founders, say for example. So it is not restricted to a particular name or a particular member of the company. So you may think over that. What is the information required? Which stage of project you are? Is it at ideation level, validation, early traction? You have already launched the product, you are getting some customer, you have started to generate revenue, or you are in scaling a business, your product is established in a particular city, now you need to move into other cities, or you need to expand internationally. Whatever is the scale up model. So that is something you need to identify, because there is a drop down. You have to identify which stage of business you are in at this particular point of time. Then which industry or service sector you are in. There is again a drop down on the application whenever you are making it on startupindia.gov.in. Then the number of employees currently employed, and a brief write up on these following points, which is brief of your business, what is the problem you are solving, how you are solving it, is there anything innovative which you are doing, or if not, how you are creating employment or how you are creating wealth. All those criteria which we have just discussed, you need to mention it. Whether your product is something which is new, say for example, we were dealing with eco-friendly clothing brand. So why they are creating clothes out of certain cellulose or certain residual of plants. It's not from cotton, it's not from synthetic, but residual of certain other plants. So in a sense, they are saying that it is more eco-friendly, it is more suitable to the health of a person, and therefore they went in for the registration, and they were readily granted it also, because they justified that they will be setting up new manufacturing units, they will be creating a lot more vendor opportunities, they will be creating employment opportunities, they will be setting up partnership with stores, they will be selling online. So all those factors and kind of business, the problem which they said was solving were that in terms of silk, they said that in silk there is a damage to the natural life which happens, because the producer, the insect which produces silk is killed after the silk is created or produced. So they said that in our process, no natural life is harmed. It is all very eco-friendly nature, and all vegan people who are somehow not very comfortable in clothes which are created by harming natural life, they have said that it is good for them. So I'm just giving you practical examples which you may come across while dealing with your clients or your customers or even your own businesses. So that is how you need to frame all these questions. What we do generally is we create a Word document, write all these queries, ask the founders to give their brief thoughts about what they think about their business, and obviously then we do certain research about their business, about the industry which they are operating in, and then we refine that particular thought into something which can be put on the application format, right? You also need to give details about how you will create revenues, what are the different streams of revenue. Say, for example, we mentioned that we will be creating revenues through stores, physical stores, online selling. We also said that we will be exporting in the export market, because eco-friendly clothing is something which is expensive, and it is very go-to thing in European market. So therefore, probably it is something which we can create a wealth for the Indian economy as well, because we will be earning in foreign exchange. So all those things you need to mention in your application while you're filing it on online. Then what is the investment, how much investment you have already made, and what are the sources of that investment, details of partners. You need to give a brief profile of the founders of the company. And if you have any videos or pitch deck of your business, you have to create links on public platforms, and you have to give links in your application. Also, the last thing which is mandatorily required is your certificate of incorporation, because nowadays MCA records are linked with the Startup India platform. And once you file your application, it verifies immediately before the submission of your application. It will verify whether the SIN number, the company identification number mentioned in your application, matches with the records in the MCA portal or not. And we faced it that it was not matching. So we raised a grievance that our certificate of incorporation is very much correct. It is reflecting on MCA portal, but while filing the application on Startup India website, it was giving an error. So once we raised the grievance, they rectified it, and they on the back end they corrected the problem, and then we were able to file the application. Now this is the kind of format which you would get when you will receive a certificate. It says that certificate private limited incorporated as a private limited company is recognized as a startup with DPIIT, and this startup is working in education industry, e-learning sector. So they will also mention what is the kind of sector industry you have mentioned in your application. That will be mentioned in your certificate of recognition. So there is a talk, it's not clearly mentioned as of now, but there is a talk that if you deviate from the original activity into something very different on which you had earlier got the startup registration, whether you will be still eligible to get these startup benefits or not. To my mind, as on date, there is no restriction placed on it, so you may still get the benefits. But if the authorities challenge it, you may have to justify it. You may have to provide justifications. Coming on to the certificate of eligible business from Interministerial Board. Again, once you have got the registration from DPIIT, then you will become eligible to file for the second stage registration. And that is also to be filed online through your original login ID password only on startupindia.gov.in. Then critical points which have to be kept in mind is only entities incorporated as companies or LLPs are eligible for tax benefit, right? So the partnership firm, as one person has mentioned earlier in the queries, that registered partnerships are not eligible to get this registration. So interministerial board registration is not allowed to registered partnership. You can only get this registration to for an LLP or a private limited company. Also, entity should have been incorporated on or after 1st of April 2016, but before 1st of April 2023. As per current standard, they take around 4 to 6 months of time period. It can come early, it can also be delayed. So there is no specific time frame laid out as of now, because the meetings of IMB are discretionary, and 3 secretary level people are generally forming the panel as of now from 3 different ministries on the IMB, which are then reporting to an interministerial group, a board, which then finally decides upon the applications. Now, what additional information is required? Your memorandum of association or LLP deed, your 3 years financial statements. Even if you don't have 3-year financial statements, whatever financial statements you have to furnish that. If a pitch deck, a video, a short video, they generally ask for a 3 to 4 minute video, not lengthier than that. And it should cover brief about your startup. It should showcase your business premises. It should showcase your products. If you are rendering any services, you can just mention that how you are rendering services. As an example of e-gaming business, what we did was they were creating algorithms. So we showed them on the computer screen that these kind of algorithms are written these kind of mathematical problems are solved, right? These kind of user interfaces are created by designers, graphic designers. So all that was shown in that video. And then a brief about the industry, what are the prospects, how you are creating employment, how you are creating wealth. And don't worry, this all can be concised in 3 to 4 minute video. We have done it. Some others have also done it, right? So it is very easy to speak about it at length, but it takes certain pain to concise it in a very precise language, right, which will convey your message. And we generally advise that you create a script out of it, do rehearse before you make that video. And also please ensure that your office premises or your manufacturing facilities or your products are showcased in that video. They are, depicted that how you are running your business. Then it should, again, innovation development or a scalable business model. That is the base criteria. Also, what we have seen in our experience, that very early stage startup which have not done any traction in the market, or which have not launched their product as of now, they generally do not find favor with the interministerial board, IMB. They don't get generally registered. As of now, we have got only less than 500 startups registered. So even though the registration is very less, in that aspect also, if you have not got any traction or you have not even launched your product, please wait for some time. Once you have launched, once you have generated certain revenues, once you have created a traction in the market, it would be much more beneficial to go for a second stage registration after that, right? Then note on product or project which you are going to have, how wealth and employment will be created. And generally projects at ideation stage are not being approved by IMB. This is the certificate of eligible business. Interministerial board hereby certifies that this LLP incorporated as limited liability partnership is eligible to avail tax benefits. Also, now in the new certificates, the industry and the sector is also being mentioned, as you had seen in the DPIIT registration format. So a tax benefit, obviously, although the section 80 IAC does not mention that you must be engaged in the same business which you were engaged in at the time you got the registration, but a tax authorities may invoke DAR if you were to say that you have deviated entirely from the eligible business activity and now earning profits, substantial profit from certain other activity, right? So they may say that this is avoidance of tax. You have routed some other business into this particular company just to get the tax benefit. So please be mindful of that. Benefits available to recognized startups. One is self-certification for compliance with labor laws and environmental laws. Basically 6 labor laws, including your EF, PF and ESI laws, and 3 environmental laws. You will not be visited by any authority, or you will not be called for any inspection for a period of 5 years, until and unless there is a verifiable and a genuine complaint against you. So otherwise, there is not going to be a suo motu inquiry, or an inspector cannot just come to your place and ask for documents and records. Then fast track processing of your patent applications, and also you get up to 80% of concession in the patent filing fees. Relaxations in public procurement tenders. Government PSUs, government authorities, government bodies generally have relaxations for startup companies to apply for. Easy access to funds. SIDBI had set up a fund of up to 10,000 crore rupees. SIDBI is the nodal agency, and various PSU banks are the dispersing banks for these kind of loans. Easy exit. Under the Insolvency and Bankruptcy Code, the time limit for insolvency is prescribed to be just 90 days for a startup entity. Then incentives from state governments. You must look into the state government policy for startups in the state which you are located in. There are a lot of policies which say that you will be reimbursed the GST portion up to the amount of investment, right? You may get electricity rebates, you may get rebates in the stamp duty for registration of your lease deeds or your purchase of properties for the startup companies, right? So you may get reimbursement for participation in startup events up to a certain extent. You may get mentorship from state-owned incubators. You may get technical supports, right? You may get some seed funding. So all those benefits are available. You must need to go through them according to your state. And then income tax benefits, we have already discussed a few of them, but we'll discuss them in little detail right now. Eligibility for income tax holiday. So it is eligible only to company and LLP or an LLP, and it must fulfill all these criteria. Basically, the criteria are same. Turnover must not exceed 100 crores. You must be engaged in eligible business, which we have just discussed in detail. You must have obtained interministerial board certification, which is the second stage registration. And you must be incorporated between 1st of April 2016 till 31st March of 2023. Once you have met all these four criteria, you will get eligible. You will become eligible to claim the 100% tax holiday, which is 100% deduction from tax under Section 80 IAC. It is allowed for 3 consecutive tax years and 3 consecutive tax years of your choice. It is not mandatory that in the year you have got the registration, you have to just claim it from that year onwards itself. It can be any block of 3 years from in the initial 10 years from the date of your incorporation. Now let's understand that how it works in a timeline. Say for example, if your company was incorporated in financial year 2018-19, and if you believe that your losses will not be consumed till FY 23-24, then you can decide, even if you have obtained the registration in this year. Say for example, you have obtained the registration in last year, financial year 21-22. You are not required to claim the benefit mandatorily from this year onwards itself. You can choose and defer it to, say for example, till FY 25-26. And you can say that from FY 25-26, I will claim the benefit for 3 consecutive years. Now, if you choose to avail the tax benefit for the first year in FY 26-27, then you will be able to claim benefit for only 2 years, because after financial year 27-28, your 10 years timeline will get expired and you will not at all remain a startup. So that is how you have to compute your 10-year period, and that is where you have to avail the tax benefit. Once you start availing it, you have to avail it for a consecutive period of 3 years. I hope that is very clear, no doubt about it. Let's move on. We have already discussed. Also, if you start claiming the tax holiday, but you have breached the threshold of 100 crore rupees, then you will not be eligible. So let's go back. And if we say that you started claiming tax benefit in FY 23-24, but in FY 25-26, you crossed the threshold of 100 crore rupees of turnover, then your benefit will be restricted to only these 2 years. You will not get the 100% tax holiday in this year, financial year 25-26, right? Or your business should not be formed by splitting up or reconstruction of an existing business. And one of the criteria is that your plant and machinery installed in your office premises or right, it should not be more than 20%. The old plant and machinery should not be more than 20% of your total plant and machinery. Now, eased conditions for angel taxation. This is one of the very, very big benefits which is available to the first stage registration startups also, which is given by DPIIT. First of all, let's understand what is angel taxation. It is governed by Section 56(2)(7)(b) of Income Tax Act, wherein it says that if you have issued shares at a premium and the premium exceeds the fair market value of the shares, then whatever excess you receive will be taxable in the hands of a company. Let's consider it with an example. Say the face value of the share is 10 rupees and the fair market value on the basis of your DCF projections, DCF valuation methodology, your fair value of a share comes to rupees 40, means 10 rupee face value, 30 rupee premium. However, you believe and you have convinced a third party to invest in your company at a value of rupees 100, which means that you are charging a premium of 90 rupees, which is or 60 rupees more than the premium derived from the derived on the basis of DCF valuation method. So the law says, section 56(2)(7)(b) says that this additional 60 rupees of premium which has been received by the company as an investment will be deemed to be other income of the company and will be liable to tax. So this taxation notoriously came to be known as angel taxation, because an angel investor was making an investment at higher values than the fair market value. But the income tax authorities said that no, because you are not able to justify the value, we are going to tax it under the provisions of 56(2)(7)(b), and which was very genuine call from the tax officers. We cannot find fault. But yes, government understood that this is a genuine problem for the startup community, because this law was brought in to tackle the black money problem, wherein the black money was reintroduced into the business through higher share premium. But obviously this was not applicable to startups. So therefore the government came up with notification GSR 127E, wherein it was mentioned that if you are a registered startup, registration with DPIIT, and you have filed a declaration in Form 2, with signed declaration in Form 2, you will be exempted from the rigors of angel taxation. So aggregate amount of paid up share capital, and also there are certain conditions attached to it. Your aggregate paid up share capital and share premium should not exceed rupees 25 crores. And while calculating this share capital and share premium, you have to exclude, means if you have received any share premium or share capital from a non-resident or from a VC fund or a company registered as AIF category 1 or specified companies, then that money will not be counted while calculating the threshold of 25 crore rupees. Now, what is a specified company? Specified company means a listed company whose shares are frequently traded on stock exchange and whose net worth on the last date of the preceding financial year. So for example, if you are getting the funding from such company in financial year 22-23, so on 31st March of 2022, the net worth of that company must be more than 100 crore rupees, or the turnover of the preceding financial year should be exceeding 250 crore rupees. So if you are getting investment from such a company, that would also not be counted for calculating the threshold of 25 crore rupees of paid up share capital and share premium, right? And the turnover, and you as a startup do not cross the threshold of 100 crore rupees, because once you cross the threshold of 100 crore rupees, you do not remain a startup, right? So you have to always be below 100 crores of threshold of turnover for availing any kind of startup benefit. So once you have fulfilled all the conditions, you have got the registration from DPIIT and you have filed Form 2, whatever amount of premium you may get from any of the investor, income tax is not going to be applicable on that. Section 56(2)(7)(b) will have no applicability on you. Now let's understand what is Form 2 and what is the declaration. The declaration basically says, the government says that you must use the funds which you have received and on which you have got the exemption also from angel taxation only for genuine business purposes, and you would not invest or spend those monies to buy immovable property, to give any loans and advances, for any capital contribution made to any other entity, either a partnership firm or a private limited company. You cannot contribute capital. You cannot purchase shares and securities, right? Motor vehicle, aircraft, yacht, other mode of transport exceeding 10 lakh of cost, jewelry, bullion, archaeological collections, drawings, paintings, sculptures, or any work of art. However, you are seeing that there are certain stars attached to some of the things. What it says is that the restrictions, such restriction of not investing in such items will not apply if you are buying this as an inventory. Basically, if you are an NBFC, you will be engaged in giving loans and advances and taking loans and advances. So being an NBFC, this condition will not apply. If you are into real estate business and you are classified as a startup, this condition will not apply. And if you are in, say, for example, jewelry business, this condition will not apply. But you may also see that the exemption is not applicable on shares and securities. So if you are a startup, however, if you are engaged in share trading and for buying and selling and investing in shares and securities, although you may classify as a startup, you may get registered as a startup with DPIIT. Your benefit from startup angel taxation will not be available because you have invested in shares and securities. If you have invested from the money which you have got from the investors. So the government does not want to encourage trading in shares and securities just by getting money at a higher valuation, right? So that is something which you should be clearly mindful of. The founder, the company director has to sign and file a declaration in Form 2, which basically declares this thing. And this declaration has to be uploaded on startupindia.gov.in under your registered login ID password. Then we come with capital gain tax relief. Basically, this is there, but as per data available and to my knowledge, this has not been used too much. Basically, it is just a substitution of 54F kind of a thing, wherein you have sold off your residential house and purchased another residential house. They have given one more option to invest in a startup company or an MSME company, and you have to use the funds for certain defined purposes only, which is new plant and machinery. And within 1 year from the date of subscription, it has to be a new company only. You cannot buy shares of an already existing company. So once you have sold the residential house, you have earned capital gains, but you have invested those capital gains into a new company which fulfills all these criteria, then you can claim the benefit and you need not pay tax on the capital gains. So what is this? The company must be incorporated between 1st of April. Say, for example, if you have sold the property right now in May 2022, but you have already incorporated a company in April, that will be counted for. That will be considered as eligible in company. But if a company was incorporated on 31st March or prior to 31st March of 2022, that company you cannot be considered to be as an eligible investment, even though you were the original promoter of that company. Right? Then the business of the same business, innovation, development and improvement of products and processes, scalable business model. Also, you must not be a fringe investor. You must own at least 25% of the share capital or have more than 25% of the voting rights in the company. And equity shares so purchased cannot be sold for 5 years. You have to hold it for 5 years. The company must be eligible. Startup registration must have registration with the interministerial board. So again, second stage registration is required to claim this benefit. So less than 500 startups are registered. So you have to be careful about that. Now, what are the conditions? Say, for example, if you have IMB registration, it should not be the plant and machinery which you purchased. You have to mandatorily use the money to purchase new plant and machinery only. And it should not have been used either in India or outside India, the plant and machinery. You cannot invest in vehicles, right? You cannot invest in any office appliances or computers or computer software except technology-driven startups. If you are a technology-driven startup, you can invest in computer or computer software, right? But generally, to my mind, plant and machinery will not include software. Software will be considered as intangible. So if you are investing in computers or technological devices, that may be considered, but only for a tech-driven company. How you define a tech-driven company is up to your interpretation. So for example, Chayos, which is a tea delivering company or tea supplying company, also consider themselves as tech company because they say the kind of data which we collect and how we manage and serve our tea is just because of the technology which we are using. We can very well predict that on which day, what kind of tea will be asked by customers, what kind of tea requirement will be there, right? In which season, which kind of snacks are generally asked for along with tea. So they themselves also portray themselves as a technology company. Also, the plant and machinery should not be installed in office premises or residential accommodation, and the whole of such cost or plant and machinery should not be claimed as deduction in the year of investment itself. See, earlier days, now depreciation is restricted to 40%, but earlier you could have claimed 100% of tax deduction on certain energy saving equipment on certain products, 100% of depreciation could have been claimed in the first year itself. So investment could not have been made in such kind of plant and machinery to avail the capital gain benefit. I'm moving a little fast because we are running out of time. We can have queries later on. A relaxed norms for carry forward on set-off of losses. We all know that section 79 says that if the shareholding of a company is changed more than 51%, right, more than 50%, and at least 51% shareholders should be holding the shares in the year in which loss was incurred and in the year in which the profit has been earned, so as to set off that previous loss. So at least 51% of shareholding must be same in these both years. Now in startup ecosystem, obviously when we keep issuing shares to new investors, there is a possibility that the shareholding of the original investors goes below 51%, and then there will be an issue of setting off of the prior year losses. So to counter this, if you have got startup registration with IMB and you have not sold your shares, means the eligible founders, the founders who were the shareholders at the time in the years in which losses were incurred, have not sold their shares but only issued fresh share capital to new investors. In those cases, even though the shareholding of original shareholders goes below 51%, the losses carried forward will be allowed to be set off against the losses of the future years, obviously subject to the conditions of the set off. Furthermore, the relief is available only for the losses incurred in first 7 years. So earlier in the Startup India program, the startup was recognized as a startup for only 7 years. So this law was also introduced at that point of time. Although in the Startup India program and the startup registration, the time period was extended to 10 years, but this law has not yet been changed. Only the losses incurred in first 7 years will be allowed to be getting this benefit under the if you have got the IMB registration. Right, so this we have already discussed. Self-certification, obtaining benefits, which is patent, up to 80% of rebate is available. More than 5,000 patents have been filed under this new regime of Startup India program. Fund of fund has been set up by SIDBI with the 10,000 crore fund. Various nodal banks, majorly PSU banks, are dispersing these loans. Then there is a Startup India seed fund scheme through incubators, government recognized incubators. DPIIT has set up an expert advisory committee which looks into the incubators, startup incubators, whether they are eligible. They have to be at least operational from past 2 to 3 years. And then once these incubators are recognized, the incubators are then eligible to recognize startups who will get the Seed India benefit. Right. So this is the process. They have set up a fund of 945 crore rupees for this SISFS scheme. Up to 50 lakh rupees are to be provided for startup for market entry, commercialization, or scaling up to convertible debentures or debt linked instruments. Right. So you can get up to 50 lakh rupees of assistance in this Seed India Fund scheme, and they can also contribute as capital. It is open all the year round. You can file anytime for either the incubator can file or the startup can file. There is no focus sectors for this particular fund. You can be working in any sector, and however, you must be an eligible startup and eligible registered startup for coming and applying for this scheme. There is no mandatory physical incubation. It's not mandatory that you must be physically be operational through the incubator. Because if you understand incubator is an institution, a space wherein new startups can come up and say that we want to incubate with you. Basically, incubate means nurture ourselves in our earlier stages of business. We'll get your mentorship, we will get your guidance. And once we grow up, then we will move out to certain other places. So incubators generally nurture very initial stage startups. So in lieu of incubation, generally the incubators take in certain amount of capital, 3, 2, 4, 5%, any kind of percentage they can ask for an equity, because once the startup will grow and then they will get some new funding, incubators at that point of time may sell off their stake to earn their revenues. Then it is a pan-India startup. It is not limited to certain states, and startups can apply to only 3 incubators at a time. You cannot apply to every incubator in India so as to get your approval done. Then eased norms of public procurement, as I mentioned, prior experience, prior turnover, earnest money deposit. These are something which can be relaxed in the tender documents. You can see. ICI itself has a wide repository of state, central government policies and state government policies, which I've mentioned the links here. You can just click on the links and go to the policies. Some of the policies are old, but you will get a feeler of what are the policies of different states. And once you have got the feeler, you can search online on Google or any other platform to get the latest policy documents from the websites also. Right? So these are certain smaller benefits which you can look for. That is it from my side as of now. We have already passed 8 minutes from 1:30, the scheduled time of closure. If you have any queries, I would be more than happy to answer them. You can contact me on my mobile number. This is here. I can mention it, 9899 784 884. This is the mobile number, 9899 784 884. Or you can reach out to me at anshul@caindelhi.com. Right. So this is how you can reach out to me for any of your queries. I would be more than happy to answer. Sambitji, over to you. Ram, if you're there.
We are thankful to you, sir, for enlightening the participants over that one is startup registration as well as the tax benefits. And you are almost covered all the queries whatsoever is raised during the session. We are once again thankful to you for almost all covering the all aspects of the startup registration, and that one is tax benefits. We expect many more sessions from you in near future.
It will be my pleasure, sir.
Thank you to all. Thank you to all the participants. With this, we conclude the session. Thank you to all.
Thank you. Yes, concluded.